It's been a rough few days for gold once again. Rising dollar, higher US yields pushing down the yellow metal back into worrying territory. We did see gold finding some support at one stage, but having broken now back below $1,800, pressuring 1785, which was the low from a few weeks ago. Suddenly, the outlook is looking very concerning. Now, it is worth noting that the technical moves on the gold chart were already developing quite negatively. We were seeing those moving averages broken. We saw the rotation off of the key fib level as well. So what we're seeing kind of play out here really was in line with what the technical picture was telling us anyway. And now we're just seeing those lows being tested. 1785 is the test that we're seeing right now. Below here, 1765, that's the late November lows as well. And quite frankly, given the developments that we've seen in recent days, that is looking extremely, extremely vulnerable. And like I say, the cause for this is not necessarily entirely technical, although the technical picture may have been priced in as a result of the fundamentals changing. We have seen US yields rising gradually now over the course of a number of months. So while we are seeing higher yields over the last few days, it's not entirely a surprise. The thing that's maybe caused a little bit of a shock in the markets is just the speed with which US yields have risen over the last few days, and the fact that real yields have been rising along with them, particularly around the 10-year and longer. So that's what's maybe causing a little bit of a jolt in the markets and what has really driven the dollar strength. But the dollar strength was very much already there. We mentioned it on previous videos, in previous interviews, that the US dollar did break out of an inverse head and shoulders pattern a couple of weeks ago. And while it did retrace part of that move, retreat back in close towards the 90 handle, it still remained comfortably above there. And we're now seeing it rotate higher, 91 coming under pressure in the US dollar index. And what that means is that gold is coming under pressure. Gold is priced in dollars, and when the dollar does well, gold tends to struggle, and vice versa. So we're now seeing higher yields pushing that US dollar higher, driving gold lower to test these previous lows. Now, if 1765 falls, then we are looking back at previous levels to see what becomes an area of interest. And I think it's hard to ignore the 1680 through 1750 region. This is a block where gold traded a year or so ago, and where we did see it consolidate around those levels. So these are the key levels which I think we'll be keeping an eye out for should 1765 break, and there's plenty of support and resistance in there. Longer term, I still think gold will remain supported, and that's, I think, the interesting thing here. This dollar resurgence is just that. It's a rebound off a long-term trend. Since March last year, the dollar has been in quite a strong downtrend. And I think what we're seeing here is just a retracement of those moves. So for the near term, for the coming weeks, maybe even a couple of months, we may continue to see the dollar trend in a more positive direction and keep gold under pressure, pushing it back towards those 1680 to 1750 levels initially should 1765 break. But longer term, I still think the dollar will soften. I do think other currencies will outperform during the early phases of the global economic recovery, and I think the dollar will soften once more, and that should be supportive for gold. So we could still see gold moving back in towards the levels we were at over the course of the last few months in the longer term. But in the short term, this dollar resurgence, these higher US yields potentially spooking the markets, again potentially favoring the safe haven US dollar, could put gold prices under pressure, and it looks as though we are seeing the early signs of that unfolding.